Financial independence is the ability to live comfortably without being dependent on a paycheck or someone else's support. It means having enough assets, income, and smart financial planning to meet your needs and achieve your goals. Building wealth in a sustainable way requires a focus on asset growth rather than chasing temporary gains or risky schemes. By focusing on acquiring assets that increase in value over time, you create a foundation for long-term financial security. The first step toward financial independence is understanding the difference between income and assets. Income is the money you earn through work or business, whereas assets are things you own that generate value or income over time. For example, a savings account, rental property, or a business that earns profits are considered assets. On the other hand, spending money on items that depreciate or do not generate returns, like luxury items, is not contributing to asset growth. By focusing on acquiring assets instead of just earning income, you put yourself on a path where your money works for you. Budgeting is the foundation of asset growth. It is important to know exactly how much money is coming in and how much is going out. A clear budget allows you to prioritize investments in assets rather than spending impulsively. Start by tracking all your expenses for a month. Categorize them into essentials, discretionary spending, and savings. Then, identify areas where you can reduce unnecessary spending and redirect that money into building assets. For example, instead of buying the latest gadget, you could invest that money into a small business, stocks, or a retirement account that grows over time. Once you have a budget in place, the next focus should be emergency savings. Having a cash reserve for unexpected events ensures that you do not have to sell your long-term assets at a loss when an emergency occurs. Typically, a reserve of 3 to 6 months of living expenses is recommended. Keep this money in a safe and accessible place, such as a high-yield savings account. This reserve acts as a safety net while you focus on growing other assets. Investing in your skills and knowledge is one of the most valuable assets you can acquire. Continuous learning increases your ability to earn more in the future and make informed financial decisions. Consider taking courses, reading books, or attending workshops relevant to your career or business. The skills you gain will not only increase your earning potential, but also help you identify better opportunities for asset growth. When it comes to financial instruments, focus on Halal ways to grow your money. Stocks of companies that produce permissible goods and services, government bonds without interest, and real estate are examples of assets that can provide long-term growth. Investing consistently, even in small amounts, takes advantage of the power of compounding, where your earnings generate additional earnings over time. The key is to be patient and avoid seeking quick returns through risky methods. Real estate can be a powerful tool for building wealth. Owning property that appreciates over time, or renting out residential or commercial units, provides both capital growth and passive income. Before investing, research the location, market trends, and potential expenses. Start small if needed, such as purchasing a single rental unit, and gradually expand as you gain experience and capital. Real estate is particularly effective for financial independence because it offers a tangible asset and the possibility of multiple income streams. Another important strategy is diversification. Do not put all your resources into one type of asset. Spread your investments across different asset classes, such as real estate, stocks, and businesses. Diversification reduces risk because if one investment underperforms, others may perform well. Balancing your overall portfolio. For example, you could combine rental income from property with dividends from stocks in a company providing essential services. This approach ensures more stable and reliable asset growth over time. Building assets also requires disciplined saving and reinvestment. Avoid the temptation to spend the returns from your investments immediately. Instead, reinvest them to accelerate growth. For instance, if your business generates profits, consider using a portion to expand operations or acquire additional assets. If you earn dividends from stocks, reinvesting them can significantly increase your wealth over the years. The principle of reinvesting profits rather than spending them immediately is a cornerstone of long-term financial success. Entrepreneurship is another effective way to grow assets. Starting a small business, whether online or offline, allows you to generate income and create a valuable asset. Focus on businesses with Halal products or services that solve real problems and have growth potential. The profits generated can then be reinvested into expanding the business or acquiring other assets. Entrepreneurship requires effort and planning, but can provide significant returns and long-term financial independence. Patience and consistency are essential. Asset growth does not happen overnight. Markets fluctuate, and opportunities may take time to mature. Avoid being influenced by short-term trends or hype. Instead, commit to a long-term strategy, regularly reviewing your assets and making adjustments when necessary. Consistent effort over years leads to a stable and growing asset base, eventually providing the financial independence you desire. Finally, tracking progress is crucial. Regularly assess your financial goals, asset growth, and overall financial health. Use tools such as spreadsheets or financial apps to monitor income, expenses, and investment performance. By keeping track of your progress, you can make informed decisions, identify areas for improvement, and stay motivated on your path to financial independence. In summary, financial independence through asset growth is achieved by understanding the difference between income and assets, budgeting effectively, and controlling expenses, maintaining an emergency fund, investing in skills and knowledge, growing assets through Halal investment instruments, utilizing real estate, strategically diversifying investments, reinvesting profits for long-term growth, exploring entrepreneurship with permissible business models, being patient, consistent, and disciplined, tracking financial progress regularly. By following these steps, you shift your focus from short-term gains to building a strong foundation of assets that work for you, leading to a life of financial security and independence. Building financial independence is not only about acquiring assets, but also about managing, optimizing, and growing them strategically. One of the most important aspects of advanced asset growth is strategic allocation of resources. After establishing a base of savings and initial investments, you need to decide how much of your income will go toward different types of assets. For example, you could allocate a portion of your earnings to real estate, another portion to Halal stock investments, and some to entrepreneurial ventures. This allocation should reflect your personal risk tolerance, long-term goals, and current financial situation. The idea is to balance growth potential with stability, ensuring your financial independence is sustainable. Real estate expansion can be a key driver of long-term wealth. After purchasing an initial rental property, consider scaling gradually. You might reinvest rental profits into additional properties in areas with strong growth potential. For instance, a small rental unit in a growing neighborhood could later be converted into a multi-unit property or sold at a higher value, increasing both income and net worth. Always conduct market research and financial projections before expanding. Real estate not only provides cash flow, but also creates tangible assets that appreciate over time. Equity investments in Halal companies offer another powerful avenue for growth. Investing in shares of companies that operate in permissible industries allows your money to increase in value over time while staying aligned with ethical principles. Focus on companies with strong fundamentals, consistent earnings, and growth potential. Instead of chasing high-risk, short-term gains, adopt a long-term mindset. A diversified equity portfolio can provide dividends, capital appreciation, and a hedge against inflation. For example, investing in companies that provide essential goods or technology solutions often results in steady growth with lower risk than speculative ventures. Entrepreneurship and business ownership remain one of the fastest ways to create and control assets. Starting small with a Halal business such as a service-oriented company, e-commerce venture selling permissible products, or local trade business allows you to reinvest profits and expand gradually. For instance, if you start an online store selling educational tools or household items, initial profits can be used to hire staff, expand product lines, or even invest in other asset classes. The key is consistency, careful planning, and focusing on businesses that serve real needs in a permissible way. Passive income streams are essential for achieving true financial independence. Passive income is money earned without continuous active effort. Examples include rental income, dividends from equity, investments, royalties from intellectual property, or profit sharing in permissible businesses. The advantage of passive income is that it continues to flow even when you are not actively working, freeing up time while your assets grow. By gradually building multiple passive income streams, you reduce dependency on active work and move closer to financial freedom. Asset reinvestment and compounding are principles that accelerate wealth growth. Every profit or return you earn should ideally be reinvested rather than spent immediately. For instance, if your investment in a Halal mutual fund earns dividends, reinvesting those dividends allows your capital to grow faster. Similarly, profits from a small business can be reinvested into expanding operations, acquiring new assets, or even entering a new permissible market. Compounding works most effectively over time, so patience and discipline are key. Tax efficiency is another important factor in asset growth. Understanding the legal tax obligations in your country helps you retain more of your earnings. For example, certain retirement accounts, small business deductions, or investment structures allow you to minimize taxes legally. Keeping accurate records of income, expenses, and investments ensures you are compliant and can take advantage of any legal incentives to grow your wealth faster. Diversification across asset types is crucial for long-term security. While Part 1 mentioned basic diversification, Part 2 emphasizes advanced diversification strategies. You can diversify not only across asset classes, real estate, equities, business, but also geographically or by sector. For example, owning property in different cities or investing in companies in different industries spreads risk. If one sector underperforms, others may compensate, stabilizing your overall portfolio. Diversification reduces volatility and increases the likelihood of steady, long-term growth. Financial education and continuous learning remain cornerstones of success. Markets, investment options, and economic conditions change constantly. By staying informed, reading financial news, attending workshops, and following educational resources, you improve your decision-making. Understanding concepts such as inflation, opportunity cost, and risk management helps you make choices that protect and grow your assets. For instance, learning about real estate valuation or stock analysis enables smarter investments that yield higher returns over time. Mindset and discipline play a pivotal role in achieving financial independence. Avoid the temptation of instant gratification or get-rich-quick schemes. Focus on building value steadily, even if growth feels slow initially. Practicing patience, consistency, and disciplined spending allows your assets to grow without unnecessary setbacks. For example, delaying a luxury purchase to invest in an income-generating asset today can yield much greater returns in the future. Long-term planning and goal setting are also vital. Define clear financial milestones, short-term 1 to 3 years, medium-term 3 to 10 years, and long-term 10+ years. These goals help you determine how much to save, invest, and reinvest. For instance, your short-term goal could be to save a certain amount for an emergency fund. Medium-term might include buying a first rental property, and long-term could be achieving full financial independence through multiple passive income streams. Breaking down goals into measurable steps increases focus and accountability. Halal investment opportunities include businesses, rental properties, dividend-yielding stocks, and funds that comply with ethical guidelines. It is crucial to ensure that all investments and ventures are compliant with principles that avoid interest, gambling, or prohibited industries. For example, investing in a food delivery service, technology firm, or education platform aligns with permissible principles and can generate sustainable growth. Networking and mentorship can accelerate asset growth. Learning from experienced investors, entrepreneurs, or financial advisors helps you avoid common mistakes and identify opportunities faster. Surround yourself with like-minded individuals who share the goal of building wealth ethically and sustainably. Mentorship provides insights, accountability, and strategies that are difficult to learn alone. Protecting your assets is as important as acquiring them. Consider insurance for properties, businesses, or health to safeguard against unforeseen events. Legal structures, contracts, and proper documentation help protect investments. For example, rental properties can be insured against damage, while proper lease agreements ensure steady income. Protecting what you own ensures that financial progress is not derailed by avoidable risks. Finally, review and adjust your strategy regularly. Markets, personal circumstances, and opportunities change over time. Periodically assess your asset allocation, returns, and goals. Make informed adjustments when necessary, such as diversifying further, reinvesting profits differently, or exploring new permissible ventures. Staying proactive ensures continuous growth and alignment with your financial objectives. In conclusion, achieving financial independence through asset growth is a structured process that requires discipline, patience, and smart planning. By building a foundation with budgeting, emergency savings, and initial investments, and then advancing into diversified assets, passive income streams, entrepreneurship, and strategic reinvestment, you create a self-sustaining financial ecosystem. Halal, long-term investments, and ethical financial decisions ensure not only growth, but also peace of mind. With consistent effort, strategic thinking, and continuous learning, financial independence is not just a dream, it becomes an achievable reality. Your path to asset growth involves deliberate choices, careful planning, and a commitment to letting your resources work for you. Over time, the cumulative effect of smart asset management and reinvestment can provide security, freedom, and the ability to pursue goals without financial constraints.